Good morning, it's Steve O'Hare from Signal Centre, and today is Wednesday, the 6th of October. And we're going to take a look at energy this morning. We're going to look at the crude oil, and then we're going to also have a look at natural gas, which is having a decent move currently. So taking a look at crude oil, and we've seen crude oil prices hit a 3-year high. They've taken out the 3-year highs, and we are going to have to look at slightly longer term charts to get a little bit of color on what we should expect. So we can go back all the way to the long-term chart, the weekly chart, and we can see the all-time high around about 148, down to the $10 level that we saw at the start of the pandemic 2020. And we are also looking at some sort of guidance from the price action historically to really look for resistance at the moment. As you can see, prices have pushed above the high formed in October 2018, and also the high from earlier this year in July, 76.35. We've taken that out. We are trading up at $79 at the moment, and there's no real sign of this slowing down. If we go back to really go back to 2006, we had a swing high before a correction that came in at 79.12. That's one of the closest levels we can get from historic price action. Also, this we can see that this resistance initially, then became support. It sliced through it when we had the big sell-off in 2008, but became resistance again in the 2009-2010 era. 2011 also found support, 2012, and again, now we expect it to be some kind of resistance. So we're looking at the $79 to $80 as pretty key. Apart from that, slightly higher, we've got an $88. We've got some Fibonacci retracement levels that tie in with a previous swing high as well, that comes in at 87.64. So as you can see, price action kicking on forward. The monthly evening star formation has failed to materialize. We've taken out that head, or the top of that move, and moving higher. No sign of it slowing down. Let's take a look at the daily chart. The daily chart clearly, we've seen 1, 2, 3, 4, 5 positive days, momentum building. Oh, we're in overbought territory, but this can continue for a while now, so there's no reason to be selling it just because it's overbought. On the 4-hour chart, we have a channel that we've drawn. This has got a number of touch points, which allows us to draw this with a little bit more confidence. 2 touch points on the top, 1, 2, 3, and multiple touch points on the bottom, although we did spike below it around here. But however, that does for us really say that we're in this consistent trend, and we should be prepared for prices to move higher. Really looking for support to come in probably around this peak, 76.38. That would be good support, along with this trend line and the cloud as well. Obviously, we can see that the lagging line has been in the positive trend, going all the way back to the 22nd of August. So no signs of slowing down. Similar sort of price action in Brent crude oil. We've got on the top end, we've got expected to see resistance at 84.16. Let's take a look at the weekly chart, and we have got a little bit more on the chart here. We've got resistance coming in at 86.62. This is from the swing high in October 2018. If you remember, the WTI crude oil was lower than this. That was there. See, October 2018, we're already above it. So the Brent crude high is still to be tested. So that could offer some resistance here. I've redrawn this Elliott wave move. For me, we're still in the impulsive move. We're in wave 5. Wave 3 is normally the longest. Expect wave 5 to be similar sort of amplitude to wave 1, which again points to a move towards around about $85. Natural gas, we've seen some incredible moves in natural gas. Well, they look incredible. From this perspective, we've seen over a 300% uplift in just just over 14, 15 months. And but if we really look back on the long-term chart, we are nowhere near a sort of reasonable correction. We've just about made it to the 38% retracement level, and we can see these spikes that have happened before in natural gas, and we're seeing another one now, so we do expect further upside here. We've got the double bottom formation here, which would had the neckline at 495. That has the measured move target to 818. We're trading 647.5 at the moment. The next resistance comes in at 668, and if we do manage to break above 668, then this double bottom for me will be key, because that will give us a measured move all the way up to the 78.6% fib retracement at $11.5. So really, really important, this 668 level in natural gas. Hope that's been informative. Hope you've enjoyed it, and look forward to speaking again next week.